Welcome to another S&P 500 analysis. Today is February 11, 2022. The market is continued to be volatile and trying to find some guidance how the Fed is going to deal with the hot CPI, the hot inflation number. In this video, we're going to take a look at the indexes and the internals and also the sentiment and see what they are telling us and what we should be prepared for. Stay tuned. Let's start with the weekly chart of the S&P 500. As you can see, for the week, we have a range of 188 points, and it lost almost 82 points or 1.82%. And as you can see, the low for the week is actually lower than the previous week low, so we are one time framing down. And also the close here, it is underneath the 10-week and also the 40-week moving average, and also this particular channel here. So right now it seems to be making a little bit of a turn down. So if it continue to move down, watch this low here, because a lot of people is anticipating this low to get retested. Not saying that it won't, but if we might do a little bit of a fake before it come down, when people thought that we had put in a bottom and then trapped those anxious buyer here that thinking that they could buy this dip. That's one of the possibilities. I'm not saying that's what the market is telling us right now, so just kind of bear in mind some of the thing that the market could do just to fool most of the people most of the time. Now let's take a look at the sentiment and the S&P 500. Here's the S&P 500 daily chart. We'll take a look at the price action in a little bit more detail later on the S&P 500 cash index. I want to highlight here's the trend line some people might be monitoring, and we saw a breakout of this trend line on Wednesday with a gap up, right? And so a lot of people probably got sucked in on this this upward move. Then on Thursday we got a reversal, and then Friday, like today, it got a huge sell-off as well, a continuation of the sell-off. Now, a lot of people are probably looking at this pivot here for a little bit of a support level, right? And you can see today it broke this. Essentially, people might be looking at this as a little bit of a W pattern, and holding this support. We're essentially looking for this price to continue to move down. And a lot of people also probably looking at this trend line and looking for this thing to possibly break this trend line in the coming day, which is somewhere around this 4,400 level. Now, looking at the VIX, you see the VIX came back up and closed at 27.36. So right now it's inside of this fearful zone between 20 and 30. So obviously the market participant got a little bit complacent here, or a little bit less fearful a couple of days ago. Then all of a sudden right now it is getting much more fearful now. And also a lot of put is being purchased, and also hedges putting on. Right now the put call ratio is up at 0.94. Remember a few days ago it was below this 0.75, and the market participant is putting on some risk. So right now definitely they are putting on a lot of hedges and also buying put for protections. And looking at the up-down volume ratio, although the up-down volume ratio was not as scary as the sell-off on the index itself, because we only saw maybe 1.821 in favor of the downside. As a matter of fact, throughout Friday, the first half of the trading session, the up-down volume ratio was actually positive. In other words, there were more up volume than down volume. Advanced decline ended at 1,431, more declining issue than advancing issue in the New York Stock Exchange. And also with the new high, new low, we are seeing a little bit elevated number of stock making new 52-week low now. Once again, we saw a couple of days up at the 300 plus level, number of stock that put in new 52-week low, and the new 52-week high, we have 69 stock make new 52-week high on Friday. So for the New York Stock Exchange cumulative AD line, there's not much to be said here other than that it is pretty much fluctuating near this low level here. So we probably will see a little bit more downside on the S&P 500 and see if we could get a positive divergence on the cumulative AD line to give us a little message that we might get a little bit of a turn here on the S&P 500. And now let's take a look at the Nasdaq market. Here's the Nasdaq 100. As you can see, also it broke out of this trend line here on Wednesday, similarly to the S&P 500. And then we got a reversal on Thursday with the CPI number, and also today, continuation of the sell-off, and then with that injection of the possibility of Russia invading Ukraine next week and that kind of nonsense. But in regardless, the market is going to do what it's going to do in regard of what the news is. If it is looking for excuse to go down, it will grab whatever come along in the wire, and they will use that as an excuse to sell it down. So right now, maybe that Russia and Ukraine invasion news is the excuse for the market to continue to sell off. So in any case, the up-down volume ratio for the Nasdaq today was 2.6 to 1 in favor of the down volume. And there were a little bit over 2,000 stock, more stock declining in price than advancing in price. And for the new high, new low, the Nasdaq market seems to be holding at this 300 level. Although I mean it's not great, but it's not up here. Almost it's 1800. Start making new 52-week low today on Friday. Only at 357 stock made new 52-week low, and that's in the background where the Nasdaq 100 is down 3% or 452 points. So that's not too bad in light of that. And the 52-week high, 53 stock made new 52-week high. So similarly to the New York Stock Exchange advanced decline line, we are still looking at it kind of chop around near the low here. So it's nothing extraordinary to talk about or to observe here. So it is just kind of trending down with the cash index. Here's a chart of the sectors. So basically, each one of these charts is for the sector for Friday. As you can see, the only thing that's in the green is essentially the gold miners and the precious metal stock like gold and silver, and also oil. The energy stock did relatively good on Friday. But other than that, if we look at the XLK right here, the technology, the financial, also the finish off on a weak side. It did have a relatively okay sort of a first half of the session, but the healthcare also closed down. As the day progressed, it also just kind of worked itself lower, and the consumer discretionary also dipped down and closed near the low of the day. Also, the stable also turned from a gain to a loss, and the retail also ended at the low, near the low of the day. Same with the home builders, the industrial, the material, and here is the real estate, the transportation, the bank, the regional banks, the steel, and also the semiconductors. The FAANG stock, notice that every one of them closed down with at least more than 1%. Looking at Facebook, it closed down like over 3.5%. Apple 2%. Amazon almost 4%, and Netflix almost 4%. Google 3%. Nvidia 7.5%. Tesla 5.37%. Twitter 3.5%. Alibaba 1.5%, and Baidu 2.5%. So every one of them closed near the low of the day. Okay, let's take a look at the daily S&P 500 price action here. Remember last week we were talking about seeing the price to get back into this price channel and see would it be able to get above this 50% retracement level and work itself up to this 4613 area. essentially get above the 4,600 level, and this is the 618. And if we could get above this, then we're essentially looking for the possibility of moving back up toward this 4750. Now, as you can see on Wednesday, we got this gap up here, and a lot of people thought this is it. We are going back for the all-time high. Then on Thursday, the CPI number came out, and it was hot. I mean, it was hot. 40 year, since 40 year, we have not seen this inflation at this level, and it was 7.5 year to year. So the market sold off, and today the sell-off continues. So right now it is coming back down to this. Remember, we have this this balance area that we're talking about, and see if it's going to come in next week. And if it does, then we're essentially looking for this thing to come down and retrace back down toward this 4,300. And if it breaks this 4,300, this low could be back in play. This is the January 24th low, right? And that low is 4222.62. Now, if there's any upside here, we're essentially looking for this thing to get back above this 45.45, right? Have to get back above this and then see what it be able to hold inside above this, within this 4,600 level. Essentially be able to hold inside of this zone, right? This retracement zone here. And for the Nasdaq 100, we're also looking for the Nasdaq 100 to see would it be able to get back above this 38.2, this 15,345. And as you can see on Wednesday, the market gave us a little bit of a fake out on this breakout. But then on Thursday, along with the S&P 500 and the rest of the market, is basically sold off of the hot CPI number. Today, the sell-off continue. Now, it is entering back inside of this balance area. So be watching these low. Watch this 14,000 level next week. If it come down to this 14,000 level and break, look for this low to get tested, then we could see much lower level. And if it could get back above this pivot, right, essentially get above 15,000. If you get back above 15,000 and hold, and then come back up to this pivot here, right near the 15,345, then there might be a chance that it could stabilize here and then work itself back up. But right now, the bias is still on the downside. So watch these levels here, because right now it's back into this balance area. And for the Russell 2000, it appeared to some of the market participants when it got back up above this 2075, we're thinking that it might come back into this balance area up above 2134. That was one of the levels that we're keeping an eye on. But first, it has to get above this 2075. So on Wednesday, it actually closed above that 2075. But unfortunately, on Thursday, even though it moved higher and moved above that level, under that hot CPI number, but it finally sank in that, hey, high inflation doesn't do small business much good, right? So they also sold off along with the large cap. So today, it also sold off. So here again, basically looking at this potential balance area, and right now it's back inside of this area. So see, is it going to come down to this 1950? So once again, we're looking at that 1950. If it breaks below 1950, then watch this 1935. We could be looking at this low get taken out. And if it could get back above these, this 2075, then we'd be once again looking at the possibility of this 2134. Would it be able to get back into the zone or get rejected and pushed back down and go and test this 2075 once again? Now let's look at the other market indexes. Here's the transportation. Saw this trend line here come up and got rejected. But right now, we essentially was looking at this level here, right? This level to see would it be able to hold about this level, this 15,346. As you can see on Wednesday and Thursday, it kind of closed above it, but today it gave it up. So now it's back again to this level here, somewhere around 14,500 to see would it be able to hold this level. and get another push back up to this 15,000 area. But if it's unable to hold this level and work itself down, look for this possibility of the 14,000 area, these pivot low here. And here's the Dow Jones Industrial. The Dow Jones Industrial is still inside of this channel here. Okay, and although it is under this 35,625, we need to see we'll be able to get it back above this 36,000 and possibly, get up to this pivot high here at 36,500. But right now, it could be in jeopardy, coming back down to test this lower channel trend line here at 34,500. And if it breaks, then once again, we're essentially looking at this 33,500. So watch for this area here, for it to chop around and see would it be able to hold. And if it doesn't hold and dip below this area, then look for this low to get taken out and dip below this 33,000. And here's the broader market index, the New York Stock Exchange Composite. You see that it is coming back inside of this balance area, dipping below this 16,708, and also basically watching for possible retracement to this level here, to the other end of this balance area, the 16,094. So keep an eye on this, see would it be able to break back above this 16,708 and try to work itself back up to this 16,932 area. But if it's unable to do that, then keep an eye on this 16,094. And here's the chart of the 10-year yield. Remember, we were talking about this 2.5% here. And this 2.5% basically is a major move from this cup and handle pattern, this 2.5%. And the other 2.5% major move is from this smaller cup and handle. So depending which cup and handle that you want to play off from. And you can see today or this week, it popped up to a little bit over 2%. And here, looking at the dollar, the US dollar, got a little pop and sitting at 96. But I do anticipate the dollar might be pulling back. Maybe it will come down and test this 94 area. So with the inflation number, we probably will see a weaker US dollar here. But anyway, we'll be watching this 95.70. If it continue to push, stay above this 95.70, then once again, we probably could see this high, this pivot high get tested and possibly get up to this 97.79. But if it dip below this 95.70, then I wouldn't be surprised to see it come back down to this 94 area. And here we saw the oil really pop today. It went up to 94.66. And here's the little bit of a longer trend type of chart here. Remember, we are talking about, this, I don't know, was it Goldman or somebody put out a $100 oil target here. So I wouldn't be surprised that we're going to see this target, this century market hit again in the near future here. So we'll see, but definitely, oil and the energy market has been quite strong as the market is rotating from the growth to the value and the defensive stock. Okay, so I think that rotation is still continuing. And here we are seeing silver making a little bit of a move back away from this 2272 area. Remember, it's basically been chopping down here. So right now, let's see, would it be able to move back up to this 2470 and watch to see would it be able to break it if it come up to this level and move up to this 2667 area. Also, we had a nice pop in gold. It went as high as 1,867.40 cents. So right now, it pulled back at this 1842. So we're going to see would it be able to move back above this 1846 and stay above it and work to it. Remember, we're still targeting gold to the near-term target to be somewhere around up here at 1923. And as we said, as long as it holds this trend line, then we expect gold to continue to move up. Now let's take a look at the SPY, the ETF for the S&P 500. You can see the price came into this zone here, this high volume zone, and closed at 440.46 on Friday. So for the coming week, I want to see would it be able to hold this level here, holding this zone here at 438, and then pushes back up and possibly get above this 444 and get back into the zone somewhere around this 446 level, and see would it be able to work itself back up for this composite point of control at 450. So that would be the upside scenario to watch. Now, if it's unable to hold this zone above this 438, then I expect it to come in to this zone here at this 434.67, and then probably chop around and work itself down to this composite value area low somewhere around this 427.76, 428 area, and see where we get a bounce back up. And if it doesn't, if it come down to this 426.46 and breaks it, then this low here would be in play. That's the January 24th low. Here, looking at the QQQ, the ETF for the Nasdaq 100, you can see price came into this zone here and dipped below this 340.45. So in the coming week, we want to see would it be able to bounce back up and get back into this zone here at this 351.97 to 352, and see would it be able to work itself back up to this 361, and possibly, if it continue to move up, possibly come back into this 367, this composite value area low. Now, if it is unable to get back into this zone here, and instead it just continue to work itself down to this zone and dip below this 342.20, then the January low would be back in play. And here on the Russell 2000 ETF, the IWM, we see that it is inside of this zone here at this 202.91 and sitting right at this composite value area low. So we're going to see would it be able to get a bounce and push us back up to this above this 202.91 and possibly move itself back up toward this zone up at the 210 area. Now, if it is unable to move back up, then here's what we'll be watching for the downside is to continue to move down to this 194.56 to the bottom of this zone and see would it be able to move back up. But if it's unable to do that and breaks below it, then we'll be looking at this January low to be in play. Now let's take a look at the ES, the E-mini S&P 500 future. This is the market profile chart. Just want to highlight some of these levels, what we call the unfinished business. Right, there are some poor high up here, and also naked point of control that need to get tagged up here. And in addition, we have quite a number of single print and also point of control and poor low below the latest setting price. And also in addition to that, let me zoom this in here, and we will see that today's session we'll basically see a little bit of a capital B type of distribution. Essentially, it's a double distribution, but also we saw it left behind a couple of the single point area. So those are the area that we need to pay attention to in the near future, because price will tend to come up, and try to fill or retest these levels here. So today we see that it partially filled this single print area here. It only filled it down here, but it did completely fill this single print over here. So next week we'll see what the price come up filling these single print, or it will either leave these behind and come down and take out some of these, finish this single print and also some of the point of control and other, unfinished business, the poor low down here before it goes back up and finish today's single print, to fill in the single print. And on this chart, this basically is a daily volume profile. I'm basically just putting volume profile and also this composite volume profile based on the chart here that I have, between this this time frame here, back in December 31st to the present, and I basically identify some of these high volume zone here, and just kind of get some idea what are some of the level that we could watch for potential bounce or rejection. So here is basically what we're going to be looking at is somewhere around here at this 43.84 area to see when the price come down here, we get a bounce. Essentially, this high volume zone, we expect it to chop around inside of these high volume zone here. So see would it be able to chop around here and work itself up to this high volume zone if it decide to go back up. But if it decide to come down, to possibly work toward this low here, then we expect it to come down and chop around and break below the zone and come into this zone here somewhere around 43.46. Now there are some high volume node here over here, this somewhere around 45.04. So we could see price get pulled up to these high volume node here. Okay, so that's a possibility. And also right now you see that the price today is kind of chop around inside of this near this high volume node here between 44.14 and 44.20. So if it come down, then we also notice that there is this high volume node that also could be attracting price to come down to this 43.26.5. So in summary, looking at this 10-year yield chart, we see that it is moving up and it broke that 1.75% level that's been hovering around, try to break above that for quite a while now for the last few months. And right now the market is basically focusing on what the Fed is going to do in the coming month. How much are they going to raise an interest rate and how quickly are they going to raise that rate? And that is the $64,000 question that the market try to find answer to. And that's the reason why we are continue to see the markets to be so volatile on a daily basis. Be sure to smash that thumbs up to help me promote and share this video. And be careful out there and stay safe.